Washington's clear-thinking headquarters. The Morning Majority, 5 to 9 on 630 WMAL.
637 on WMAL. Brian Eva, Tony Blankley in the house this morning. Jake Tapper of ABC News comes your way about an hour from now. We'll talk to him at 7:36. Larry Kudlow from CNBC at 8:36 as well. John FELMY joins us now from the American Petroleum Institute here in D.C. Good morning, John.
Good morning.
Well, oil prices, gas prices, always in the news, especially when they're around $4 a gallon. I do wonder, though, why is the price at the pump so high right now? I mean, we hit an all-time high in D.C. a couple of days ago, over $4 a gallon. The price at the pump is extremely high, but the price of crude really isn't all that high if you look at the history of crude oil in the last couple of years. So why is there a difference at the pump versus the price of crude?
Well, the key thing is when you compare right now versus what happened in 2008, the big difference is back then refiners were losing money on almost every gallon of gasoline they made. So right now the price of crude oil is very high. That's one of the contributing factors. The price of ethanol is high. You've also got credit card fees, sales taxes, and overall energy costs, and that's why you have $4 gasoline.
So you're saying that the refineries actually were losing money in 2008 when crude was $145 a barrel and gas was still hovering around $4?
That's absolutely right. If you look in 2008, for a good part of the year, they lost money on almost every gallon of gasoline they sold. The margins were very, very low because we were in a recession and demand was soft.
Well, we weren't in. Well, all right. 2008, before the break, I guess technically we were in a recession.
That's right, beginning December of 07.
Mm-hmm. Okay. To me, it just doesn't make a whole lot of sense if it's $145 a barrel and we're only at $100 a barrel right now, and we're paying the exact same price we were paying in 2008.
That's because people were losing money, and that was because of very soft demand. Crude prices were high; they were higher, and so as a consequence, refiners couldn't pass along their costs.
Okay, so where do we expect it to go from here now that the price of crude is dropping? Or are we going to see the prices at the pump dropping? I think we've seen that in the last couple of days.
Yeah, we've seen the price already drop several cents. What you saw was the main increase was due to crude costs of over $1 a gallon. Now they've come down about 30 to 40 cents, and you're seeing gasoline prices follow.
Why were the refineries so willing to lose money in 2008?
Well, they had no choice. Refiners are like bakers. They don't control the price of wheat or the price of bread, and so you get whatever's left over, and you got to keep a viable enterprise going forward any way you can.
But they don't feel there's a need to do that today?
They have no choice. This is all supply and demand. It comes down to the supply and demand for gasoline is one factor, and the supply and demand for crude is the other, and they get what's left in between.
Okay. Are they going to do we have a problem with refineries in this country? Are there not enough refineries? I mean, if we had more refineries, would the price of gas go down?
Well, as long as you can import gasoline, which you can right now, that's not the main factor. The key factor is the cost of crude oil. And to fix that problem, you've got to look at the worldwide factors of why crude oil is so expensive, and that's record demand from places like China.
Well, what percentage of our refined gasoline are we importing now? Are we pretty close to 100% use of the existing refineries?
Well, we're running about 80% capacity
80%.
of existing refineries, but the key factor is that you need to look at how much actually supply has been there. And so far, the refinery system has produced record amounts of gasoline this year. We import a little bit of it, primarily on the East Coast. We export some to places like Mexico and so on because of agreements we have.
Mm-hmm.
So on balance, the key is the supply is there. It's just the cost of making it.
Because I remember a few years ago, I thought we were just about out of excess refining capacity. So that's improved in the last couple of years?
It certainly has. First of all, refinery capacity has expanded somewhat. And then second of all, they've been able to change their structures so that they can squeeze more out of the barrel. And so we've had record production of gasoline.
What has the demand of ethanol had? What kind of an impact has that had on the price of gas?
Well, we've seen ethanol prices from when everything started to increase last year. We've seen ethanol prices go up about 90 cents a gallon. And so if you're blending about 10% ethanol in a gallon of gasoline, it's about 9 cents a gallon cost increase for ethanol alone.
Let me ask one question about tax increases, because as you know, some of the Democrats are talking about raising taxes specifically on the oil industry, and most of us sort of pretty routinely say that that'll get passed on to the consumer. So it's not a way to particularly get even with the oil companies for those who want to do that, or to help out the driver, the buyer of gas. How do you analyze how what the consequence would be if the government were to raise that to, I guess, $1 billion a year for 10 years, a $20 billion tax increase on oil?
Well, irrespective of the pass-on issue, the question is, how does raising the cost of producing fuel help a consumer? There's absolutely no argument you can make in that regard that raising the cost of producing fuels will help in terms of prices. That's just nonsense.
Yeah. But what about the pass-through part of it?
Well, that's going to be very much a function of the supply and demand conditions for gasoline, and that's really hard to project. And we don't get in the business of doing that because of antitrust law.
Ah, of course, yes. Good point.
Now, is there a correlation? Is there a formula for the average consumer to say, hey, when the price of crude is at this number, we can expect to pay this much at the pump, or does it fluctuate depending on the environment, or the timing, the season, and those types of things?
It does fluctuate. On average, if you go back to about 1968 and adjust for inflation, the difference between the retail price of gasoline and the cost of crude oil in dollars per gallon, and that's the key factor you have to look at. There's 42 gallons in a barrel, so you need to convert it to dollars per gallon. The historical difference was about $1.13, and right now about 50 cents of that is taxes, and then everything else is the refining, marketing, transporting, and delivering costs, along with some earnings.
So then, does that mean if we're at $100 a barrel or $110 a barrel, we can be expected to pay $4 at the pump?
Well, it depends, again, on supply and demand. As in the case of back in 2008, you couldn't make that argument because of the differences. You had margins squeezed. Crude oil in 2008 averaged about $2.37 a gallon, and gasoline was $3.26, and so the margin was 89. Right now, it's about $1.10 historically through the beginning of the year.
All right, John. Good to have you on the show. Thanks for your time. We appreciate it.
Thanks for having me.